Okay.
Thank you very much for coming. As we all know, like a big part of it, first of all, a lot of you people that I've met already over the last couple of months, a couple of years, some of you will be here. A big part about starting a business or growing a business is to be able to obtain financing. You need to have money to make money. So we are very happy to have it here. We have 3 individuals who are very involved in direct lending to small business owners. So I think the way we're going to work it is that we're going to have, I'll introduce each one. There'll be 3 individuals here. They're each going to give a little brief synopsis of what they do, what they can offer. And then we'll have basically an open Q&A, and everyone's invited to ask as much questions as you can, and you can direct it to each person you want to ask it to, and they'll answer. So we'll go in order. So what? You want me to look what?
Hold on.
Stuff from, yeah,
Okay, hold on one second.
if you don't mind, yes, we go this, we'll go this way, left to right.
Wait.
Sure.
So the first on the panel is Ricardo Devolon from the Business Solutions Center. Basically, he works as a liaison to help, if someone's looking to start a business or grow a business, he connects them to people looking for funding. He directs them to the best possible lending opportunities for that particular business. Then we have Shlomo Haft from Hebrew Free Loan Society. Who, I just want to say this on a personal level. I'm very, Baruch Hashem, I'm very happy to say that we've worked together on a few loans here in the Canaz community, and a couple of individuals actually have received the Hebrew Free Loan Society, and Baruch Hashem doing very well. And we thank Shlomo for that, and Hebrew Free Loan Society. It's always a pleasure to work with. We have Shlomo here, and we have Mr. Yanki Markowitz, who is also from the SBA loan group, who's also a direct lender from the SBA, to be able to help, again, small businesses and growing, expanding businesses get financing. So we'll start with Ricardo, just give a basic synopsis, and then we'll go down. I think we should have everyone talk first, and then we'll open it up to questions.
Yeah, sure. So I'll give you guys some insight. NYC Business Solutions is a completely free government agency. So essentially everything that we do is no fee to you as New York City residents. Our ultimate goal is to help small businesses start, expand, and grow. We do this by connecting small businesses to a suite of services. Those services include things such as free courses. So if you want to learn about things like how to market your business, or how to use QuickBooks, or how to go through business financial statements, you can come in and actually sit down and take advantage of these free courses, ask questions to instructors, and they'll give you guidance. We offer pro bono legal and accounting assistance. So if you're looking to connect to accountants or attorneys to speak about legal structure or bookkeeping or entity types or contracts, leases, you can actually reach out to NYC Business Solutions, and we'll provide you with pro bono accountants or attorneys for general consultations. We offer free recruitment services. So if you're looking to connect to staff instead of you going out and paying for job postings, you let us know what type of candidates you're looking for. We'll actually find those candidates for you completely free. My expertise is connecting small businesses to financing opportunities. So whether you're a startup business or a growing business, come to NYC Business Solutions. We'll sit you down. We'll learn about your financing needs. And our ultimate mission is to essentially have lenders compete against themselves to give you the best rates and terms for the funding that you need. And this is at zero cost. So that's us in a nutshell.
Okay, I don't know how much time I have, but just cut me off if I go too long. First of all, we've made about 20 loans in Crown Heights. They're all interest-free. We make loans up to $50,000 for small businesses. We work very closely with Ricardo. All of our loan applicants meet him. He prepares financial projections for all of our loan candidates during the loan process. And if someone does not qualify for our loan, Ricardo helps them find financing elsewhere. We basically lend to all types of for-profit businesses that sell either a product or a service. We don't lend to real estate businesses. We lend to complete startups and to people expanding their business. We're looking to lend to people who are not bankable. So if you come to us and you can qualify for a bank loan, we'll probably refer you to Ricardo to find financing elsewhere. We lend to people who reside in New York City, Long Island, and Westchester. That goes based on the residence of the owner of the business. The business can be located in New Jersey or elsewhere. preferably within the metropolitan area, but you cannot reside upstate in Muncie or Monroe or New Jersey. We don't lend to you, you're not within our geographic area. The loan process takes about a month because the loan committee, which decides about your loan request, they meet once a month. So it usually takes about a month to get an answer. If you do get a loan from us, it will appear on your credit report. We do report loans to the credit bureaus, which is good news if you're paying on time, because it'll help increase your score. You do not need to necessarily have good credit to get a loan, but all loans require 2 guarantors who have good credit, earn at least $60,000 a year, and reside in New York. We don't take collateral for loans, so in lieu of the 2 guarantors, all loans require 2 guarantors, and that's without exception. If you are approved for a loan, we will file a UCC lien on your business, which it's not going to really impact you unless you want to get bank financing afterwards, but this is a matter of information. And if you want to get a business loan application, it's on our website, hfls.org. You can download an application. I'm sure afterwards Rabbi Werdy will be giving out my contact info. If you have any questions, you can be in touch with me. One last thing. Loans are up to $50,000.
That's a recent increase.
Interest? Not that long.
Interest
No,
free.
it's not.
I guess I'm the last resort. Literally. They both have great programs. I have a company called SBA Loan Group. We specialize in helping small businesses obtain SBA financing. Whether you're aware or not, SBA stands for Small Business Administration. It's a branch of the federal government. And common misconception is that SBA is the actual one who's giving you the loan. It's not. SBA is bank financing, and the SBA in turn gives a guarantee to the bank who's giving you that financing. Depending on how much you're borrowing, will determine the guarantee. It goes up to 85%. We specialize in loans from $100,000 up to $5 million. This can be used for working capital. It can be used to buy out a competitor, buy an existing business. It can be used to buy real estate. It could be used for inventory. SBA is a cash flow lender. Although it is not an asset-based lender, they're not looking for collateral. If collateral is available, it must be pledged. In terms of UCC, SBA technically could stand behind another bank or another lender. There are about 400 pages of rules in SBA. That's why I have a job. And to go through each one of them would take probably 2 weeks. But any questions, I'll be glad to answer. The main thing you have to know about it is there to help small businesses grow, and they are looking to lend money. They can be very useful at the same time. If you are capable of getting conventional financing, that's the best way to go. One more thing I'll add, if you are at the level of buying real estate, not for investment purposes, for your own business. If somebody's buying a warehouse, an office space, an office condo, that's going to be used at least 51% of that space by your business. SBA offers you 90% financing. There are ways to get 100% financing. If you're at that level, I'll be glad to answer any questions. There are fees associated with SBA loans. SBA has what's called an SBA guarantee fee, depending on what your guaranteed portion is. Each amount, it goes up to about 3.5%, which they'll finance for you. SBA is a term loan. It's not like a line of credit where you can pull out the money, pull it back, and you pay interest only while you use it. SBA is typically a 10-year loan, just like a mortgage. Let's say day one you got $1 million, you start paying them back the next month over the course of 10 years. And that's basically it. I also sit on the board of a company called RBAC, which is a community development corporation, aka a CDC. Virtually in every neighborhood or in every city there are a few of them. The largest in New York is NYBDC. We are the largest in New Jersey, and we're also direct lenders up to $250,000 in the Community Advantage Program and up to $150,000 in the microloan program. That's it.
Does SBA lend to new businesses?
Does SBA lend to new businesses? The answer is yes, but remember, SBA is not the one who's giving the loan.
Right.
It's a bank who's giving the loan. It's up to the bank's discretion if they want to fund that new business. But based on the guidelines of SBA, yes, you can do a startup, you could actually have bad credit, you could have no income. They're very liberal, but there are also a lot of contradictions in the SOP. The SOP stands for Small Business Administration's guidelines. Like I said, there's 400 pages. Some of them contradict each other. For example, SBA requires a 1.15 debt coverage ratio, which means for every $100,000 of payback that you have to do, you have to demonstrate that you have annual income of $115,000. Some banks want it to be 1.3 debt coverage ratio, which means $130,000 for debt coverage ratio. However, SBA also says you can do a startup, which means you have no income, and you can do it all off of projections on what you assume you're going to make if you get that loan. So the short answer is yes, you can, but it's extremely difficult.
Yeah. So to give you guys some insight, more insight as to what we do here at NYC Business Solutions, our role is to help you navigate those issues that you may face when working with organizations with the SBA or just traditional financing. The way that we operate is you come into our offices and say, hey, Ricardo, I'm looking to obtain funding for either a startup business or a growing business. I ask you questions about the business, what's your industry, I ask you questions about things like your capital injection. When I say capital injection, what I mean by that is as a small business, if you're starting up, back to your question, you should never expect for lenders to cover 100% of your project cost. Give you a further explanation, if I'm looking to open up a retail location in Brooklyn, New York, and I know that this new retail location will cost me about $100,000. This is from building out the space to hiring my staff to marketing to purchasing my equipment. If I know that's $100,000 in order for me to do that, I can never go to the bank and expect them to fully fund this project. I should expect that the lender will ask me for a capital injection. A capital injection is pretty much your skin in the game. For most lenders, that baseline is 20%, right? As a small business owner, or potential small business owner, you may not know this, right? My role at NYC Business Solutions is to help you check off those boxes. So I'll talk to you about things like what type of capital injection you should expect for your project. I'll help you understand what sort of credit requirements you have or credit needs you have for funding. I'll help you understand how to put together a business plan and projections. My role would also help you understand how lenders look at cash flow. So going back to your point, right, what sort of debt coverage are lenders looking for? Is it 1.3? Is it 1.1? Is it 1.25? And then after that, it's to connect you to lenders, right? It's connecting to 3 or 4 different lenders, having them compete against themselves to give you the best rates and terms, lay them on the table, and then have you make a determination as to what makes the most sense for your company. Right. So that's how we. So it's very general it's very general on purpose. We don't assign ourselves to one specific lender. We keep ourselves very general so that when you come in, we'll be able to get very specific based on your specific needs.
A question, maybe, I don't know, Ricardo or Yankee, for the fullness of the discussion, can any of you sometimes people get lucky and they'll find an individual person who might be ready to come in as an investor. What is the general rules? Like, what's a safe, what percentage is a little, in other words, if you're taking somebody in as an investor, what are like some general rules to know about to get into a healthy investment possibility? You have thoughts on that? Or?
Yeah, I can start with that. So when you're taking on an investor, know that you're looking for traditional debt financing, right? So we're going to use that scenario. I'm looking to take on a potential investor, but I'm also looking to take on traditional debt. I should understand that lenders will require any owner or guarantor that has over 20% stake of the company to be on the application. And so if you're speaking to investors, but you know that these investors are only willing to provide capital, but not willing to provide a guarantee. When I say guarantee, that means providing financial returns. That means being willing to provide real estate as collateral. If you know your investors are not willing to provide these two things, right? So tax returns and collateral, you want to make sure that they fall under 20% ownership. For a lot of the lenders that we work with, they even say if it's close to 20% ownership, we need them on the application. So you can't be, you can't find a workaround and say, look, we're only gonna give this individual 18%, because lenders will still require for them to be on the application. So you have to be very mindful of that.
In terms of SBA, that's exactly correct. 20% is considered an owner of the corporation, and they have to provide full guarantees. In my experience, though, SBA is not as strict as getting close. Our magic number is 18.5. Just so you don't have 19, so keep it at 18.5 to keep it under the 20%. But that is exactly correct. I don't know if that was your question.
Well, that was with regard to getting a loan with an investor. I mean, what if somebody, I know this because there's people in the neighborhood, they come here and they're going to start a business and they'll find someone in the neighborhood that's ready to be an investor with them. What is a healthy, what is it, in other words,
Which is a split, what's split?
what's a healthy type of relationship if you're going to take on an investor as opposed to taking in a bank? Like, what, never give away more than 50%, never, is there certain general rules if you're going down that road of taking an investor as opposed to taking a loan?
Yeah, should I repeat the question?
You don't have to.
In my experience, everybody's different. The same thing like a shoe, someone's shoe size, or what they're interested in, or who they're interested in going out with. I've seen investors who have 60%. I've seen investors who have 20%, and they put in a capital investment, and yet the guy who has 20%, who has the 80% is still upset after a couple of years. I'm working. I don't have any guidelines. Everybody can make their own matches in my personal experiences.
I discourage investors only because as the principal, you're gonna be working 100% of the time in this business, and blood, sweat, and tears are gonna be into it. And you might be giving up 50% of ownership that in a few years, this other person is just receiving checks and you know that you built the whole business yourself. I would recommend getting a loan to get started, especially interest-free loan, not burdensome, and building up the business slowly. And there are options out there in the market for people who will come in as a temporary investor, and they'll invest money, and then you're able to buy them out at a future time, within a few years, so that then you own 100% of the business. And they came in when you needed them, they get a nice return on their investment, and you end up owning 100% of the business. So that's what I would
You
recommend.
know, so certain goals once they get done.
Yeah.
But,
What's the name of that option?
How do you get those?
I can give you the name of the gentleman, name of the business, offline. I don't wanna recommend him publicly. But I'm happy to give you the name afterwards.
Would those people invest money with the stipulation that they can get percentage from the profits?
They'll look at the business, and if they feel it has potential, they'll make a different, every agreement is different, every business is different, but the same concept, the concept is, number one, their return is not as rich as some of these online lenders. You could go online today and get $250,000 and pay 40% interest. They're not in that market. They're looking, they bet on safe bets, businesses they feel have very good potential of being successful. They get a fair return. If I'm gonna throw out a number, maybe like 15% to 20% over the term that you have their money. And then it's negotiable as far as when they'll get out of the picture.
So
Question?
Ricardo wanted to say something.
I just wanted to just throw one thing out there. So when we think about how much an investor should contribute to a business, going back to both these gentlemen's points, it's really hard to identify a specific baseline number. Every business or industry is different. And so what a lot of businesses do, especially the ones that have high potential, is they provide something called a convertible note. And the way that works is, let's say I have a new concept for a phone that will be better than the iPhone, for instance, right? And I need somebody to invest. Normally, if I don't understand how much this business is worth, it's really hard for me to understand how much percentage I'm going to give this company, right? How do I know if this business is worth $50,000 or $5 million? And so what I'll say is, if you provide me with a loan of $50,000, what I'll do is I'll give you a convertible note, which means I'm gonna use this money to build my business. Every year, I'm gonna give you a agreed upon interest or some sort of return. And once my business gets to a point, whether it's 3 years down the line or 5 years down the line, where I can appraise this business or get a valuation of this business, I will then convert this note or this loan to a percentage based off of the agreed upon valuation. Does that make sense to everybody? So it's almost like I owe you in terms of understanding how much your percentage is, but let's just wait to figure out what this company is before I can give you that number.
In the convertible note, they pay before that 3-5
Sure.
year period also?
Sure. So we're gonna give you an annual rate of return, and your percentage will be based on whatever the valuation is down the line.
You have equity in the company and ongoing,
Exactly. Exactly.
All right, so we're opening the floor to questions now, so.
You had a question? Did you have a question?
Yeah, I did have a question for Shlomo.
Okay.
The question you mentioned is a company that provides interim lenders, right? Is that what the people that step in, but what you were describing earlier, that the
Like the temporary investor?
temporary investor, do temporary guarantors exist out in the market? People who would not necessarily have to come out of pocket dollars, but but provide or step in as a potential guarantor with potential returns for that, service.
I don't know, I'll let Ricardo answer, seems to be nodding. I am not aware of any.
So is this in reference to making a loan product, to obtaining a loan product, or just for?
In other words, my goal is to initially reach out to a Shlomo type of loan situation before I bring in investors, before I go to banks. That to me is the lowest hanging fruit.
Right.
And I think you said that you take on non-bankable situations,
Mhm.
which I like, and I would love to get more of an understanding of what that means.
Okay.
But if that's the kind of situation, the thing that I personally need are the guarantors to make that happen, because I'm very comfortable with the business plan that I have, the projections, etc. So guarantors are the key to unlock that particular situation. So I just want to know, are there people out in the world that would lend their credit or whatever to being a guarantor as opposed to being an investor, where they don't have to come out of dollars, etc., but still get some sort of rate of return in return?
Well, let me answer first. Most of the borrowers that we're lending to are going to family and friends, and that's who is gonna guarantee a loan for a business that is not bankable yet. It doesn't have enough. But other than that, I know of a situation in Williamsburg where a gentleman had built up a business for a few years, and he went to a wealthy person in the neighborhood. He showed him his business plan, and the guy believed in it, and he decided to sign on as a guarantor. For this person, it was a $25,000 loan. For this person who gives similar amounts of charity, he said, you know what, I'll sign, and if it goes bad, so this will be my charity, but I believe in this business, and the borrower paid back the loan on his own. So that, I would recommend that.
That's exactly the kind of market I'm looking for, and I just want to know if there is a defined market like that, or it's just a matter of pounding the pavement and finding those particular kinds of wealthy
If I were you, I would sit down with Yehuda.
You'll have to find
And,
someone really, that's.
Right, okay, I just want to know, as I say,
If
there's
you
a pool.
sold your business plan to Yehuda and said, yeah, this really has a lot of potential,
Right.
and then he might be able to hook you up with people to talk to.
Right,
I
okay,
mean, someone ultimately has to be interested in the product, obviously.
right.
Okay, we'll go, yeah, okay, yeah.
In
Yeah,
connection
sure.
with the guarantor, you said only New York-based guarantors?
New York City, Long Island, or Westchester.
They even the guarantors, not just.
Right, we're getting guarantors
Why
and
is,
the,
like, if someone has a good uncle and,
yeah, in Michigan or something,
and very good
well,
financial.
the reason, we have a geographic area because we're a subsidiary of the UJA, and that's how it was set up in 1892, that this was our geographic area. There are Hebrew Field Societies throughout the country. This is where we're located. As far as where the guarantors need to live, unfortunately, if we have to sue them to collect the money, it's just logistically easier if they're in New York.
The guarantor is for Why'd you say he has to pay back? The guarantor doesn't have to pay anything, he guarantees that in case it falls out.
Right. Well, he was saying maybe it might be easier to get a guarantor if I give them a return, like as an incentive to sign as a guarantor.
No, the guarantor.
But your guarantors don't pay anything unless you stop paying, and then they would have to take over
So
the
you
loan.
said New York, what are the 3 states?
New York City,
Yeah,
Long Island, Nassau, Suffolk, and Westchester.
okay.
So the guarantor has to pay the lump sum? Or
No,
the
they can take
guarantor
over
just-
the monthly payments. Just to be clear, our loans, the term is maximum of 60 months,
Mhm.
and the loan committee, when they review the loan request, if they approve it, they tell you how much you have to pay per month. Sometimes it's 24 months, 12 months, 60 months, 36 months. Sometimes it's a lesser amount the year one, greater amount year two. It's all based on the financial projections, which Ricardo prepares.
Oh, that was my question.
Let's try to live in order. So I'll just, everyone will get a chance, so let me just speak.
Yeah, my question's a little complex. So let's say you have a business and there are two people that are interested in, I guess, being working investing the same amount of money, being working partners. But before that happens, there's like kind of like a one-shot opportunity. I'll be a little more specific. There's a wine company, and you're trying to move wine, let's say, from New York to some state in the middle of America, and just like a test run opportunity with some wine store out there, wherever it is, and you need like 10, 20 grand. So let's say I take 10, 20 grand from here, from one side. Clearly, I know for a fact that I may not even break even on this one run, so to speak. Do you suggest that that's something that?
I mean, we don't
Be
really
wise.
make loans to like one-shot deal type of things.
Okay.
We're looking for some kind of experience in the field. So let's say you had been in the wine industry for a while.
Like a
So that would be a good thing,
Yeah.
but they would want it to be more of like an ongoing business, that you're going to be wholesaling wine.
No, it will be an ongoing business, but this particular, it's like a starting kickoff.
They
Thing?
wouldn't underwrite the loan
Event,
based
it's an
on
event.
the first transaction.
Okay.
They're gonna look at the whole picture. Like your plan is to buy and sell X amount of dollars of wine every year.
Yeah.
They're not gonna go down to the nitty gritty of how much you're making on the first transaction, the second.
Okay.
So
So there's really no
most
point
businesses don't make money the first few years. And that's where you talk about
I don't think-
bankable.
Yeah.
Banks are gonna wanna see 3 years of profit. So if you're in business less than 3 years, even if your business took off from day one, you're not bankable. You also may not be bankable if you're in business 5 years and you're making money, but your credit score is 580, that's not bankable
You're
either.
saying profit, not revenue, profit.
Yeah, they're looking at profit.
Because I was advised to go to the Baruch College to do financial projections, but you do that, right?
Yes, so
Could you
both,
repeat the question, please?
sure. The question was, the young lady was advised to go to Baruch College, which has SBDC, which stands for Small Business Development Corporation. And SBDC works very similar to NYC Business Solutions, in which they help small businesses start or grow. SBDC is state funded, we're city funded. SBDC has technical assistance in which they can assist small businesses with creating a set of projections. We are a little bit different, whereas we can do the same, but the projections must be connected to some financing opportunity. And so what I mean by that is, it's really hard for you to walk into a NYC Business Solutions office and ask for projections if your end goal is not to obtain funding, whereas an SBDC might not have as strict a requirement.
Okay. And then secondly, is there a template that people could just create their own without?
Second question is there a template for projections? The answer is yes. You can find that online, or you can find that through both the SBDC and NYC Business Solutions. If you shoot me an email, I can send out a template.
I would just add that, we send our loan candidates to Ricardo, and all of them say what a wonderful experience it was, not just because he's filling out the numbers, but he's asking questions about your business, that you learn more about your business than you would just by filling out the numbers yourself. So I would highly recommend meeting with an individual who knows what they're doing, and can help you really understand your business, not just what's the, how much am I gonna make year 1, 2, and 3?
And do you have any tips for approaching potential guarantors? What do you say to them? Hey, I'm starting this great business, but if it fails, you're paying for it. Well, you wanna be my guarantor?
Most people are using family and very close friends. It's not an easy thing to ask, especially if it's a startup business. But, it is a requirement on all of our loans. We've made over 300 loans totaling over $7 million. And so that's a lot of people who found co-signers, guarantors. So, if someone can't find a guarantor, I would go to like a local community organization like, CHYE here in Crown Heights, and talk to them, and maybe they would know some some wealthy people in the community that would be sympathetic to your situation, and maybe they would guarantee.
So just to be clear, Ricardo, just in terms of projections, it's only with the end game being applying for a financing. It wouldn't just be.
Right.
It wouldn't be, okay.
Right.
Can you repeat that question, please?
Okay.
Yeah, so the question was, just to be sure, when you are approaching NYC Business Solutions for support with completing a set of projections, the end goal should be to eventually obtain funding. This service is tied to identifying lenders, and so it would be really hard for you to come into our office, our NYC Business Solutions office, just to complete a set of projections if you're not pursuing financing.
Yeah, so I'm not fully clear on the SBA. So if you work with banks and you're talking to them about getting loans, why wouldn't I just go to a bank? And I'm a little confused there.
No problem. The question is, if I work with banks who essentially get guaranteed backing by the SBA, and they're the ones who's giving the loan, why would you have to come to me as opposed to going to the bank directly? So the first answer is the same as why would you have to go to Richard, right? Ricardo, sorry. You could go directly to their lenders. Every bank has their own criteria of what kind of loans they'd like to do. I deal with about 50 banks nationwide. I know what my banks, or at least the ones that I deal with, want to see in their portfolio and what they would likely approve. I would say out of $300 million in lending that we've done, maybe 3 loans had to go to a different bank than the original bank that we placed it. 7 out of the 10 loans that we do, they've already tried going to other lenders. They've tried going directly to their lender. Lenders have a box they want to fill out. The same thing, you have a car, do you use a leasing company or do you go directly to the dealer? Right, the dealer is going to get the best, the leasing company will get the best deal for you and get it done quickly.
So you're basically
So,
a service.
It is a service. It is a service, 100%.
Do you take something like a?
Yes, we get a fee. We get a fee depending on the size of the loan. We're mandated by SBA, which is 2% for the first million, 1/4 of 1% for each additional loan. When I said I'm the last choice, I meant it. I had to do last choice.
No, I was just trying to.
Yeah, that's fine. So we, on a $5 million loan, for example, would be a $30,000 fee. However, on a $500,000 loan would be a $10,000 fee. It's just the way the structure works. Like I said, I typically deal with $100,000 up to $5 million. Our average loan size is 1.4. If you look at SBA statistics, the average loan size in SBA is only $400,000 to $700,000.
So do people come to you after they get rejected by 2 banks?
Yes, they do.
Okay.
I have people today I was working on a deal that was rejected by a bank, and now I'm working for him with that same bank and just restructuring it properly. Part of what Shlomo said before, that he'll ask you, Ricardo's going to ask you the right questions. That is for the assumptions, am I correct?
Yeah, projection.
The assumptions are just as important as the projections. The assumptions tell you why are you going to project X, Y, and Z. So in our service, they do it for free though. That comes along in our package. We do the projection and assumptions for you. But first and foremost, when someone comes to us, the way we work is I want to see all the financials beforehand. I want to see everything about your business and go through the process. and to tell you what I think I can get for you. And then you could either sign up with us, or you could go to the bank and try it yourself, and see if they do it. I will tell you, 9.5 times out of 10, if a bank's offering you $300,000, I'm getting you $1 million. If a bank's offering you $250,000 in a credit line, again, I'm getting you $1 million. So it really depends on what you're trying to accomplish. And again, it could-
higher going through you or going through?
No, it all depends on the bank. I again, I deal with the big banks, Chase, Citi, Capital One, and those will be low rates. But typically, I'm working with the smaller banks, ones who are probably not New York based, who are in some small town in Kansas, and the only way they have potential revenue, because they only have $5 million in deposits, is through SBA financing. They don't have enough businesses over there, so they come to guys like us, and we develop relationships. There are 3 banks that we're the exclusive SBA department. If you call up the bank, they will refer you to us.
What's the criteria? The business has to be starting business or?
So, the question is, what is the criteria? There are about 400 pages of rules. They all contradict each other. Startups is fine. SBA says that you can lend to startups. Again, the bank is the one who's giving you the money. SBA is just being your guarantor. So they're going to guarantee 75% of your loan. This incentivizes the bank to give you money. Because if the bank's going to give you, they said before, $200,000 in line of credit, their risk is $200,000. Well, let's say $250,000. That same bank could give you $1 million and still be only exposed for $250,000 if they give you an SBA loan and if you met your criteria. Or in some cases, or in most cases, you prepare the package correctly and explain why that $1 million is going to catapult your business to the next level. Banks want to see at least 1 year of financials. SBA says 3 years. Sorry, do you follow?
Mhm.
Right. SBA says 3 years, but at the same time SBA says it could be a startup. So if you need 3 years, then how can you be a startup? I could work with 1 year of financials. That means if you've been in business for 1 year and you have 1 year of tax returns that have been filed, I could deal with that.
If it's on an international level?
No, SBA is only an American
If
base.
it's coming now from overseas here?
The business is moving from overseas to here, so you
It
can
was
create it.
running before, I was running the business before in Australia. If coming here now?
I have to look into that. I've never dealt with that.
I guess you'd have to register here and get an
Yeah,
address.
absolutely, that's what I want to say. No, that if
The
I
question
start
is,
up now.
I don't know how it works in Australia. In America, when you go for a loan, the bank is gonna have you fill out a form which is called a 4506T, which that gives them right to contact the IRS to look at your tax returns and see if what you're presenting to them is actual tax returns and you didn't Photoshop it.
Mm.
So, I don't know how they would verify that in Australia. Maybe there's such a program there as well. I assume there is, but I don't know. I do deal with Australian companies and Australian investors, and they tell me the banking in Australia is much different than here in the United States.
Can the 1 year financing be on a Schedule C?
Yes. The question is, can the 1 year financing be on the Schedule C? Most small business start off on a Schedule C, especially in the Jewish community. But yes, it's a part of your tax return. It's sort of as if you're a sole proprietor or just coming from.
And what if your Schedule C shows you don't make any money with this business, you're losing?
Technically you can, but the bank will not give it to you. As far as an SBA rule, the question is if you're not making any money, can you still get it? Technically, yes, based on projections and assumptions. However, most likely the bank is not going to give it to you. I wouldn't work on it.
But what if you're doing something totally different? Like say you were
So you're
a
startup.
coach, and now you've got this idea to expand that to something else.
So the question is, what if you're a coach or you're changing your strategy,
Yeah.
right? So that has worked. That has worked as long as there's at least a little bit of profit. I have companies who've changed their model, going from $60 million in revenue, where they were making $200,000 in profit, net before taking out a salary, where they changed the model and did $22 million the next year, and had $600,000 in profit. So the model can change, but that went for the better,
Well, what if
and
you're-
it's proof. I'm sorry.
well, what if somebody's working full-time and they just have a very part-time business, they take on one client every 6 months, they're not making much money, they have, they have to pay their costs
Right.
of doing business, so it kind of washes
So
out.
again, it would go towards the startup. If a bank is willing to work with a startup, maybe Pardon
Maybe
me,
just
yeah,
to
that-
broaden the question, maybe it's to everyone, like, in terms of startup businesses.
Startup businesses
what-
can be done
right.
through
No, I
SBA.
understand, I'm saying, what would someone need to show to be a good candidate for a loan? Like,
Yeah.
someone starting fresh a business, it's a great business idea, and so what is a lender looking for them to be a good candidate for a loan? I guess it's fair for each of you maybe just to, but that's what people wanna know when they come to me, is that they have a great idea, great business, they don't have the startup capital to start it. I mean, so when they write a business plan, what do they wanna see? What is the lender looking for to see? You know, so-
Well, we look for, either experience in the field or like a family mentor who's gonna help the person. So, to give you two examples, one gentleman came to us, he was opening up a grocery store. He had just opened the month before, and he wanted a loan. He had been managing a grocery store for 5 years for someone else, so we felt he had the experience to be successful in his new business. So even though he had a month's worth of sales, we made the loan to him. Another situation where a gentleman wanted to open a bakery, he had no clue, he was never in the bakery business, he was 23 years old, but his uncle was in the bakery business, his cousin was in the bakery business, the whole family was helping him, so we felt comfortable making that loan as well. So we basically look for either a track record, actually operating that business, that specific business successfully. We have people who come to us with Amazon businesses, they say, you know, I wanna sell on Amazon. We say, sell on Amazon for 3 months, show us that you know how to buy goods, sell them at the right price, have a good customer feedback rating, and then come to us. So the track record doesn't have to be 3 years or 5 years, it could be a few months, but at least show us that you know how to operate that business. Or show us that you have someone in your family that's gonna be holding your hand throughout the process.
So there's two answers to this question. So one, going back to the question about if you have a business in another country and you're moving it here to the U.S., the Australia-based business, you should assume that that's a new startup, right? You should not assume that lenders will say, okay, your business existed outside the country and it was successful there, so it should be successful here. U.S. is a completely new territory, and so they will not use those financials to predict whether or not you'll be successful here. At most, what they'll do is they'll have that, and this is relating back to Shlomo's point, they'll have that speak to your management capacity or your experience in running a business. The second piece of this is that when you're a startup business, there are a couple of C's. I use C's to help you understand what you should be aware of. There are a couple of C's that you should be aware of as a startup business to help you understand whether or not you're ready to pursue funding. The first C is management capacity, so that's being able to show, whether it's a resume or experience, show that you have the ability to run the company, right? That's extremely important for lenders because at the end of the day, these guys are shareholders. Their success will be predicated on your business, right? If your business is successful, you'll be able to pay back the loan. So they want to make sure you have the ability to run it. That's the first C. The second C is credit. So lenders will look at your personal credit to help determine whether or not you can afford a loan product or whether or not you can be responsible for the loan product. For most businesses, you want to try to have a credit score above 640. For commercial lenders, they ask for credit scores above 680. More specifically, they want a credit score above 720, right? The third piece is collateral. If you're looking to start a business, lenders will ask you about what sort of assets you have, whether it's personal or business assets that you are willing to pledge as collateral. Meaning, worst case scenario, if this business fails, what can us as lenders go after to help recoup some of the money that we lost? For a lot of businesses, this is personal real estate, this is cash, this is equipment, this is fine jewelry, right? So what sort of assets can we go after in the event that your business cannot pay back the loan? The fourth piece that I want to mention is capital injection, which we briefly touched on, right? So if I'm starting a business, how much cash do I have on hand to contribute to the project, right? Most businesses require that you as a small business come to the table with a minimum of 20%, right? If the project cost is $100,000, I should have about 20% or $20,000 ready to contribute to the project. The last C is the cash flow piece. For a lot of startup businesses, there is no historical income for you to look at. And so for lenders, what they will ask is, let's take a look at your personal income and have that demonstrate cash flow. The idea behind that is, if you are working or if you have a spouse that's working, we are a little bit more comfortable in providing the funding because we know, worst case scenario, if the business is unable to pay the debt, we can reach out to either you on the personal end or your sibling or spouse to contribute for loan payments. So those are the 5 C's that you should consider as a startup.
I'd say all of the above, plus in SBA they want to see an injection and a startup of 25%. If you're buying a business, if you go down as low as 10%, they still want to see 25%. Just going back to your question about Australia, Ricardo is most likely right, unless your business itself would not change any dynamics of, for example, if you are selling Vegemite and your clients are in Australia, as long as the cost of shipping wouldn't be that great, there's no reason why you wouldn't retain those clients, and especially if you have contracts overseas, then I would have banks would accept that. But if it's just a business that you presume you're going to move here and it's going to be successful with new clients, it would be considered a startup.
I have one more question. If it has to do with inventions.
I'm sorry?
Inventions, it has to do with new technologies for mining. So before you give the loan, you attract the expertise from scientists before you consider that you want to invest?
So it's a new type of
New technologies, completely new technologies. So that requests American patent or international patent before you can introduce it to the industry. So that means because it's in America, you have to start all over. Doesn't matter where you come from, Russia, Australia, doesn't matter. You have to completely show it, which is possible. It doesn't take more than 6 months, but the question is, does the bank require first to show everything and get the expertise from the scientists, and then they would invest? So what's the...
I've only dealt with two technology companies. They didn't have any patents or anything like that. They were offering the service. One of them, just because I have permission to use his name, is Seller Cloud, which is a very popular system, inventory system, tracking system on Amazon and eBay sellers. He had his existing revenue, so it was an existing business that's continuing. He's constantly growing and innovating. As you know, as a technology company, you're going to constantly tweak your product, make it better, do some add-ons, do the upgraded 2.0 version or 3.0, whatever the term is today. So I didn't have to show any patents or anything like that.
You just have to give a business plan? Or...
The business plan. In your case, like I said, if it's an existing business that's in Australia that you're going to continue over here, you still have the Australian-based consumers that are going to give you revenue or provide revenue for you. Then it's a continuing business just with a new address. If you're starting from scratch, it's a new technology, and this is a brand new concept that doesn't exist before, and you don't even know if your existing clients are going to use it, it's a startup. But you don't have to show your patents, you have to explain why you think it's going to be able to be successful. How much money were you talking about, out of curiosity?
Billions. I mean, profits
To start.
The startup depends. There are 28 different projects, so
Gotcha.
could be like even 250 as a startup for each of them. But it depends how quickly we start developing.
Gotcha.
So you also get us to the question first.
Yeah, a couple questions. Ricardo, you mentioned that you have free courses. Are those open to anybody?
Yeah, so the question was, we mentioned that for NYC Business Solutions there are free courses. Is that open to everybody? The answer is yes. I actually teach 2 or 3 courses. I teach business financial management, I teach marketing, 10 steps to starting your business, and business planning basics. There are 5 different locations. I'm sorry, there are 7 different locations throughout the 5 boroughs. There's one located on 9 Bond Street. So if you are interested in taking, and by the way, when I say courses, this isn't like college seminars. It's one day for each topic, usually from 5:30 to 8:30. So if you want to learn about marketing, You come in on a Tuesday from 5:30 to 8:30, and you learn about marketing for that one day. Non-Bond Street has its own course. I operate out of the Lower Manhattan Center, and we have our own courses. You can take them as much as you want. They're all completely free.
Related, you get a certification?
No certification.
Okay, website?
Question is first question was, is there a certification? The answer is no. There is a website that you can jump onto to get more insight on the available courses. The website is nyc.gov/business.
And then, a question with the SBA loan group. Does the business that you loan to, have to be located in New York?
No, we're nationwide, but remember, I'm not the one who's lending it. If it's in New Jersey, I may potentially be able to lend it to you, but we do nationwide lending.
Okay, other question?
Yeah, so it's regarding real estate, right? So someone that has bought a few buildings and has managed to flip them and, now there's people living in it and it's profitable and there's income coming in from rent. Do SBA loans or real loans, would they work, instead of an investor?
Right, so SBA does not lend to real estate investments or real estate companies.
Right.
They're looking for businesses who are going to occupy that particular property at least 51% or more.
I mean, assuming this person is putting in a lot of his or her own money.
No, it's not about that. For example,
Owner occupied properties.
correct. If you had a storefront, right, and let's say on top of that storefront there were 3 apartments. As long as your storefront represents 51% of the space of that building, SBA would give you funding for that. But if you're looking for passive income, SBA doesn't lend to speculative ventures, even though technically startups, every business is speculative.
What if he has a really
It doesn't matter.
good track record?
It's not about that. It's only it's a business loan. It's not a real estate loan. They don't look at the rent roll of the property. If you had a property that was paying you $1 million in rent, but you can't afford to pay $5,000 by yourself, even if payments were $5,000, SBA would not consider the other income coming into that property as cash flow. You have to qualify for it yourself. The only type of properties that are real estate based businesses are hotels, hospitality, nursing homes, or
Like an actual.
addiction. I'm sorry?
I heard real estate wasn't part of it.
Yeah, real estate is only in the event that you are occupying that piece of real estate.
So if you use part of your apartment for your business, let's say.
No,
51%, so.
no, it has to be a commercial space.
Oh, I didn't see it, it has to be a commercial space.
Yeah.
But you could, so no one could live there, no one could live.
Again, people can live.
51%.
The question is, does it have to be commercial, or can you live there? Can you use your apartment as real estate or your personal home? No, it has to be a commercially zoned building, aka a business has to be able to occupy.
So if you buy a factory,
Yes.
and get a tenant in there, could you get funding for that?
If you buy a factory,
You're not the one running the factory, but you get a tenant in there. You have someone that wants to lease it from you. Can you get?
in other words, if you were to buy a warehouse and someone would want to put
It
their
is
warehouse.
commercial.
No, you have to be owner occupied. The owner, aka you, has to occupy at least 51%. The rest you can lease out. You can lease out 49% of it.
They're only commercial.
Only commercial. Again, if the other 49% is residential, you can still buy that. As long as the space that you're occupying,
You yourself.
51%, your business is occupying 51% of the
That's what it
space.
does it for, yeah.
Yes, but not residential. If the other part is residential, but your actual business occupying 51% of the commercial space, yes, you can get that financed. Again, if you want to buy a house, a 2-family house,
Right.
and make one
51%
floor,
of it is a business.
but legally not allowed to be there, it's not commercially zoned, so it won't work.
If you're buying a commercially zoned house, there's such a thing.
For example, if you look on Kingston Avenue,
Yeah.
upstairs you have,
Right.
they use it for office space, but
Right.
technically those are apartments.
Right.
If you, just put an example,
okay.
Koto or Kingston Pizza, if they want to buy their building with SBA financing,
Yeah.
they can. because most of the space is being used for their business and it's
They can live
commercially zoned.
upstairs,
They could live upstairs, yes.
commercially zoned. And they can also rent out the other apartments.
Yes.
Oh, so that's called commercial.
Alright, so we're running out of time. Does anybody have any other
I
business
have a
questions?
question, I have a question.
Yeah, okay.
It's a long shot. How about, let's say Airbnb, do you guys fund that? Is there a way to get funding for Airbnb?
It's a much more complicated answer. You have to get, you have to show that less than 51% of your revenue is coming not from interest payments. Oh, I'm sorry, I think I misunderstood your question.
Airbnb, you know, people,
Airbnb,
they
they rent
yes.
the things, no.
It's like,
I
it's
thought
like,
you were talking about
like
the,
the
business
hotel
lenders.
business, you said you do
No,
that, so.
that's not. That in itself is a different problem.
Depending where.
If it's zoning. No,
Certain,
I thought you were talking about B2B business.
Time for one more question and then, everyone.
A comment, she could get funding, but not through this program for what she wants.
Right, we're not through
We'll talk about, you want me to,
You have a new panel.
A business,
Then,
Take a-
Oh,
business.
saying about-
a business loan
Answer.
question. Anyone?
What's it, you have a question?
yeah,
Could you talk about, you said that possibly some businesses could qualify for up to 100% financing.
Yeah.
That could be very valuable to a lot of
it's
people.
not qualified, it's possible to get 100% financing. The way that would work, there's two programs in SBA that would allow you to buy real estate for your business. The question is, how can you possibly get 100% financing? So it's sort of a little trick. SBA will give you 90% financing in the 504 program. The way that program works, 50% of the financing comes from the bank. 40% of that finance of the project will come from SBA eventually, they'll replace the bank, and 10% comes from you, so aka 90% financing. In the 7A program, as I said before, traditionally it's used for inventory and working capital, possibly machinery, business expansion, buying out a competitor. If you use that program for 90% financing, and let's say you're buying a building for $1 million, so you put down 10%, you have to come up with 10%. I can then get you working capital on top of that for 500,000 or up to 900,000, as long as 50% or more of the loan proceeds are being used to actually buy real estate or owner-occupied real estate. I can get up to 50% more in a 25-year amortization.
All right, so I think we'll, so thank you very much for all three of you for giving of your time, really.
Websites for everybody?
Yeah, I mean, so how, I mean, in terms of anybody wants to contact